Good morning. Welcome to the XM.com weekly market update. And we're joined again by Pete McGuire, the CEO of XM. Pete, welcome back.
Good morning, Andrew.
Let's get into it. Plenty of data again this week.
Sure.
We'll start off domestically again. The Australian unemployment rate around that 3.5 level again. Very resilient labour market.
Yes, it certainly is. I mean, there's been no question about it. If you want a job, you'll get a job. We've said it now for the best part of a year and a half. And that just seems to be the way of the world in Australia.
Yeah, and we know it's a lagging indicator, but it's not such a bad thing that you have a strong labour market, just generally.
Well, it's wonderful. I mean, you know, the herd on Main Street with higher interest rates and housing and all those other metrics that we look at, if everyone's got a job, at least you can pay a mortgage or pay some rent.
That's right. But I guess the bogeyman in all this is inflation.
Yep.
So we see that pretty much everywhere now. It has been coming down in most economies. Australia actually, it jumped the other direction last month. So they were sort of saying, is that on the back of all the flooding and et cetera? But it's interesting to see that's probably not fully under control just yet.
No way. I mean, it's 7.3 and we're tipping 7.6. We're at 8% by Easter. We're less than 3 months from it. And the storyline with higher energy prices, we've seen a move to the upside, very, very solid for Brent. And you're now running at over $88 a barrel. If that was to break 90 or 95, then that would greatly impact all forms of inflation. And that's not a good sign, Andrew. So we may be, it's too early to call as far as the inflation number.
No, that's right. And talking about the crude, we can look at that here. The inflation going up, crude, it is creeping up again. It certainly hasn't spiked by any means, but from, I guess, the RBA's perspective, not heading in the right direction.
No way. No, we're up with the best part of about $13. It's been a glory trade over the last month. Anything long crude, long energy, long base metals, China reopening. It's been a great trade, and that will probably continue.
Yeah. Now we look at interest rate policies. We've got the Bank of Canada. We've got a couple of slides on Canada this week. So Bank of Canada are looking to raise interest rates again, but it's quite a busy chart there. But the red, the green and the maroon there is US, New Zealand and Canada have probably been the most aggressive central banks.
Yes, absolutely. And the talk, and you know, as far as Canada, they've got unemployment's been at record lows, but the other side is with cheaper energy, it seems some form of levelling off from a inflation number, but now you're looking at, you know, how aggressive are they going to be. I think it's about a 60% probability they'll have an increase for the Bank of Canada. So yeah, it's going to be an interesting week from central banks over the next month.
Yeah, and once again, that plays into the CPI in Canada. It has come off a little bit last month, but once again, those numbers are fairly stubborn around that sort of 6.5–7% mark. Yeah. So it is coming off, but I suspect they'd like that to come down quite a bit further.
Well, they're a big exporter, as we know, as far as, you know, oil sands and energy. So let's just see how, with higher energy prices, what impact it has to Canada.
Yeah, and in relation to earnings, wages, etc., the average earnings going up, which is a good thing. Wages going up, which is probably a good thing, even though that's off an extremely low base or a negative base, but at least they're heading back in the right direction. So, but does that, once again, earning more is great. Does that feed into higher inflation though?
Traditionally it would, but you know, you've also got to feed your family. So there's the other side of it. It's a tough line, and we all understand the dynamics that central bankers face.
Yeah, exactly. So. Finally, we're moving into earnings season. The banks came out last week. Some of the banks weren't too bad. Others were sort of struggling a little bit, which once again is it was to be expected. So on the back of the interest rate rises. So we've got the big tech companies coming out this week. Microsoft come out tonight. We look at the chart there. Obviously, the top blue number there, that's obviously the S&P. But Microsoft hasn't performed too badly, and it's hard to read on that chart. But the tech companies only in the last few weeks have actually picked up a little bit of steam. They were sold off significantly, so it's probably no surprise, and we'll touch on another slide shortly.
Yeah, but they've bounced very nicely.
Yeah, and the Nasdaq is certainly performing well this month, and overnight Microsoft, another $10 billion addition into OpenAI, the chat GPT platform.
Yes.
So they're obviously putting a lot of money into that AI. So it'll be interesting to see what those numbers look like overnight.
Absolutely. Yeah, for sure.
finally found this chart here, the NASDAQ.
Yeah, it's a
so
good
it's
chart.
basically, it's in general terms, it's basically saying if the first 3 weeks of the year is up X%, this is what the end of the year will look like. So it looks at 1, 2, 3, about 7 years there. So 2023, we've got 2023 there saying 6.2. That's actually up around that 9% mark now.
Yes.
So this is from last week. But that gives you a view of if the NASDAQ is up any of those figures, those percentages, you look at the end of the year and there's a couple of big end of year numbers there. That 2012, like 16%.
It could well be the case.
37, 47. So there, and that would certainly be a big turnaround from last year.
Yep. Well, we'll just have to wait and see. We've both got an opinion on where it'll be. So the jury's out, but the numbers, it's been a very solid move, and they're out of the gates racing in the first 3 weeks of the year. It's been nothing short of spectacular for the NASDAQ.
It certainly has. So, but once again, it's probably still all about...
It's a long way to run.
It's a long way to run, and interest rates are still in play.
You bet. Well, we've got the lockdown. We've got Lunar New Year, nothing happening this year, and you're in the heart of Chinatown, and you're feeling that energy, and that's a global, I suppose, energy, the lion dances and everything, and then you're looking at a lockdown from the Fed, no market commentary, media blackout. So that's all going to be game on come early Feb.
Yeah, that's right, when it all kicks back in. And then there's plenty of data coming out in the next week or so as well.
Yes.
So, with the PMI figures, etc. So time will tell. But yeah, I think at least considering what last year was like, I think a lot of people are probably happy to see a bit of green in the market.
Yep. Yeah, see how long it lasts.
The feel-good factor.
Yeah, it certainly is a feel-good. There's no doubting that. That's psychology and sentiment.
Yeah, but certainly we'll see how that plays out over the coming weeks and months. So.
Oh, yeah, it's going to be a wonderful run up to Easter.
Yep, certainly will. Anyway, thanks again, Pete.
Good to see you, Andrew.
Catch you next week.
Look forward to it.
Fantastic. Excellent. And that's the xm.com market update.